Good morning, everybody. Welcome to Thursday, October 24th. Man, there's not many days left in the month of October. Yesterday ended up being a pretty decent day on Wall Street. Dave and I will get into that along with earnings and other economic news that's starting to leak out just a little bit here and there. But remember, folks, now's the time to make sure you don't have too much risk in your current portfolio. Give us a call right now at 382-0037 to schedule your financial x-ray review. Dave will be with us in just a moment.
FM, that's Rihanna along with Calvin Harris. It's 8:39 now, 21 before 9. It's time to check in on your money. Find out what's going on Wall Street this morning. It's earnings season, meaning we got hundreds and hundreds and hundreds of companies reporting. And we got some macro news to kick the thing off. Let's head downtown to the offices of Statler Financial Services. Phillip Statler standing by. And Phillip, before we had to run to get on the air, we were both kind of expressing surprise after the kind of crummy attitude we had toward the market yesterday morning. Everything was showing at least a modest shades of red. We turned it around and actually ended up in green ink yesterday, didn't we?
Yeah, we really did. I mean, it was kind of an up and down ride yesterday because even when I looked at it mid-morning, we were up. However, after lunch, I looked at it and I thought, man, this flopped around because now we're down like 8 to 10 points on the S&P 500. And I looked at it, didn't get a chance to look at it last night, but looked at it this morning and we closed up, 8 or 10 points, I think. So a surprise.
I was almost opposite you in terms of pattern. I checked mid-afternoon and things looked like it was going to be kind of crummy. And then right before I went to bed, I checked the thing and I said, what's this? Green ink? Is that a typo? I reloaded and yeah, it was absolutely real. I thought I might be looking at the day before. It was one of those weird ones. Starting out the morning with the macro news, first of all, because some of this was kind of a surprise. Durable goods orders, the stuff that companies buy that lasts. Federal government reports September, it was a 1.1% decline. And I gather that's a big miss from what the market expected, huh?
Yeah, it was. I mean, they expected durable orders to be about down, still down, but 0.7 and not the 1.1. So a little bit off there when we look at the durable goods orders, meaning, people haven't ordered as much stuff, and we'll see how that plays out in this next quarter.
Understood. It looks like it was energy that was causing a good chunk of it because the core orders were down by only 0.7%, but negative is never good news. On the good side of the fence, jobless claims declined by 6,000 last week. First-time jobless claims, only 212,000 first-time unemployment claims, which still is mind-bogglingly low.
It really is, Dave. It is low, and it's lower than what they expected. The expectation was 215,000. Not a big deal, but still, it indicates that we've still got full employment. For the most part, if you want to work, there should be some kind of job out there for you. So that's kind of unique, and we continue to flow in that direction. So.
Yeah, there's no indication whatsoever of the employment situation anyway changing much. We're still in boom times for employment. We see indications of the economy slowing down, but it's not reflecting itself in any kind of an unemployment picture, is it?
No, it's really not. Now, a couple other things we expect to come out today. We expect new home sales to come out today sometime. And I was looking back yesterday, we talked about oil inventory. I don't know what was expected, but it was down 1.7% from what the previous month. And then I looked at existing home sales, and existing home sales on Wednesday missed by about 1.5%. So we've seen a few downturns there, which I think if oil inventory is down, that means the price probably is going to go back up a little bit.
Yeah, I think that probably was a surprise because expectations based on the futures yesterday was that we were going to have a surplus of oil because the price of oil was going down. So I suspect a decline in inventories was a surprise in the other direction.
Yeah, I think so. I mean, so we'll see how oil prices fare out today when we get ready to finish up.
Understood. So we go to the earnings reports as earnings season continues, and I got to make note that number one on my big loser list is President Trump's favorite company. Evidently, you can't make money off of the president's tweets somehow because Twitter really had a bad quarter based on their stock price.
Well, it's not so much they had a bad quarter, Dave. They were profitable. I mean, they just missed their profitability by 3 cents a share. And so they came in at 17 cents instead of 20 cents a share that was expected. Now, they did miss on revenue also. They did say that this last quarter, they added 145 million daily active users during the quarter, which was better than Wall Street had anticipated. However, the big shoe is that drops is that they gave weaker than expected guidance for the current quarter. And so that's really kind of what's hurting them this morning. When we
Wow, internet stocks are always volatile, but as you run through the numbers, it doesn't sound like that big a miss, and I'm showing them down like 18.5% in pre-market trading.
Yeah, and that's where they are. And so that's I think it's probably they missed on all three numbers, right? They missed on earnings, they missed on revenue, and they lowered the expectations. So it's like three strikes, you're out.
Evidently, and a lot of investors are saying you're out off of that. That's really a precipitous loss for only like you said, a 3-cent miss on the earnings per share. Talking about pleasant surprises, I can't see Tesla moving the economy very much, but Elon Musk is so much fun to watch. He came out with a report, and holy crud, Tesla was profitable last quarter, huh?
They really were. They came out with a $1.86 profit for the quarter, and they were expected to actually lose 42 cents a share. So you do that math, I'll do it rough in my head. I mean, that's what, $2.20 some cent a difference there than what was expected. Revenue was still slightly short of what the estimates were, but the automaker's bottom line was helped by cost cutting and record-setting deliveries that we looked at. And so, Twitter was down over 18.5%. Tesla's up 18.25% this morning.
One of the analysts I read on my news ticker called it a Picasso-like report for the quarter. I found that kind of amusing.
Yeah, it's Tesla's always fun to watch. You never know what you're going to see from Elon and those guys. Hey, I want to switch gears just a little bit, Dave, and look at airlines because we got three airlines reporting today. We got American, Southwest, and Spirit. So we got American Airlines coming in 2 cents ahead of estimates. Revenue was basically in line with what they expected, even though they had all this grounding of the 737 MAX, which affected them drastically in the quarter. They were still able to eke out that profit, and so they're trading up this morning, not by much, but 0.6%, still up. So that's a good sign. Then
Absolutely. Given the fact that we'd gotten an earnings warning from American about how big the write-off was going to be for the 737 MAX flights, that's a pleasant surprise.
That's true. Now, another airline, Southwest, drastically affected by the 737 MAX. That was probably one of their main airlines. They earned 15 cents more than what was expected. Again, revenue, like American, was in line with what they had forecasted. They've been able to raise their fares and still have strong demand as they've been going forward. They're up almost 2% this morning.
What's our third shoe?
So the third shoe, I mean, the airlines are just having a good quarter. What can I say?
Yeah.
Spirit Airlines came in. Get to the right place here. Oh, there they are. They 9 cents a share above expectations on their earnings. And in their case, revenue was slightly above the forecast. And all of this, one thing about Spirit is they have kind of a limited destination and a limited time scale that they run on. And so when the Hurricane Dorian came through, that was a big impact for them compared to the other airlines. So even with that, they were able to come off in pretty good shape. And they're getting a pretty good bump today. They're up over 5.5%.
Wow, that's 3 for 3 on the airlines. That's kind of a pleasant surprise, especially since it tends toward being an indicator of disposable income as well.
Oh, that's true because that means people are traveling, and still that hasn't backed off of that. So it's kind of like you look at airlines, you look at hotels to kind of determine what travel looks like.
Yeah, understood. Speaking of disposable income and whatnot, it sounds like people aren't disposing of quite as much income as they expected at eBay in the process, one of the dinosaurs in making money on the web. I'm looking at them on my big loser list this morning, down the better part of 8%. What the heck happened to them?
So it's another thing of current quarter things, right? Because they beat the street when it came to earnings and revenue both. Um,
Okay.
but but they came in and they adjusted their current quarter revenue forecast down, and it did not meet with the analyst expectations of what they thought it should be. And so they're trading down. If I can find out where it went here.
You
Um,
got more current quotes than I do, but I'm getting close to 8%
yep.
down on eBay on pre-market trading.
Yep, they're down almost 8% this morning. Now to balance that out, we have PayPal. I know it's not exactly the same business, but people use that to pay for online stuff. They beat by 9 cents a share, and so revenue was above the estimate also, and they raised their full year forecast. So for them, it's kind of they beat on all three fronts, and they're up about 8.3% this morning.
I was going to say they're toward the top of my big winner list this morning. So that was the kind of a tale of two internet moneymakers. While we're on the high-tech side of the fence, did you have a chance to find out what Microsoft did? I know their stock has been re-rated by a couple of analysts up by $10 for the target price, so I'm assuming they had good news last night.
Yeah, they did. They came out at 13 cents. They beat by 13 cents on earnings per share. Revenue was above the forecast, and all of that was good news. But they had some bad news in their report. They had that Azure cloud service, and it grew slower than expected during the quarter. But it's not hurting them at all today. They're up about 1% this morning.
All righty, got time for one more before we tie the ribbons on it. What sounds hot to you this morning?
Well, let's look at Ford. Ford's been it's had its ups and downs. It's having a little bit more downs than it is ups lately. But they came in 8 cents ahead of estimates. The revenue was just a little bit above what was forecasted, but in their case, they have reduced their full year profit forecast lower than expected because of China sales and some higher warranty and incentive expenses. So they're getting beat up a little bit this morning, down a little over 3.5%.
Ouch, ouch, ouch. One of the big ones I don't want to see that happen to. Setting the table this morning, we were green ink, surprisingly, at the end. Dow was up by 0.17% yesterday. That's a little under 46 points. NASDAQ up by about 15.5, and the S&P up by 8.5 yesterday. 45 minutes before we open, Phillip, tie the ribbons on it. What have we got for pre-market activity today?
So, Dave, right now we're going to kind of continue where we left off yesterday. The Dow's up about 40 points. The S&P 500 is up about 4.5 points, and the NASDAQ's up almost 42 points. And so then we look at where we are on the commodity side of things. We've got gold and silver are basically kind of flat. I mean, gold's up a $1.75 an ounce, and the silver's up less than 5 cents. And crude oil really not moving much, but it did go up yesterday significantly. It's at $56.13 a barrel right now. And I think yesterday when you and I talked, it was somewhere around in the $53 to $54 a barrel.
Yeah, your reading without the delay that I've got on it is considerably higher than mine, so the trend is definitely upward this morning. 45 minutes before we open, everybody else was green around the world. Asian Rim closed green this morning in both Hong Kong and Japan, and the European markets are trading up midway through their day as well. Phillip, advice, solid sorting through my retirement portfolio. That's always smart all the time. How do I find you to schedule a review?
Devin, give us a call at 382-0037. It's a great opportunity to make sure you don't have too much risk in your current portfolio. And again, as tax rates are at all-time lows, it's a great opportunity to find out if it makes sense for you to do some Roth conversions. Call us to find out if that would be good for you. And then join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on your News Talk 730 a.m.
Oh, righty, and streaming online on that station at newstalk730am.com. Phillip, thank you so much. We'll catch you in the morning, all right?
All right, man. You have a great one. I look forward to talking to you again tomorrow.
Be well, my friend. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, I want to thank you for joining us today. If I can be of any help to you, a Roth conversion, does it make sense for you? Call me right now to find out for yourself. 863-382-0037. Have a great day. I look forward to speaking again tomorrow.